that glow that you experience, our brains have evolved to give us that, to crave connection. So I hope you go out, I hope you find a stranger, and I hope you tell them all about the last time you cried in front of another person. And then tell me how it went. Thanks. Oh, I said stay here? Okay.
All right, guys. How are you guys doing? Are you all good? Maybe not good. How is everybody doing? How you doing? And here, Joey and friends, his favorite line is how you doing?
Doing good, Chris. On a Saturday, we're able to play badminton with Kelly.
Good for you guys. I was gonna join you, but it was raining.
All right.
All right, do we have volunteers today or a volunteer today to lead the prayer? Do we have one? Anyone? Anyone? Anybody? But I think volunteer, oh my God, it's very sad. Sell in the work, selling laptop. Joseph is selling laptop. Good for you.
From Owen.
Okay, I'll volunteer.
Who's gonna volunteer to lead the prayer? It's a minute before 7. Come on, you guys.
Yeah, if no one will volunteer, I'll do it.
Okay. Last chance. last chance to save Marilu. Or no one wants to save you, Marilu. So go ahead.
Okay.
Recording in progress.
All right, so let us put ourselves in the holy presence of God. In the name of the Father, the Son, the Holy Spirit. Amen. Lord Jesus, we thank you for this opportunity that we are again gathered virtually to have our training with Chris. We thank you for all the blessings, for giving us healthy body, healthy mind, and soon to have healthy pocket through this free training. Thank you for everything, and we hope that you will always enlighten us and give us a freedom to speech, to express our ideas as we go along our training. This we ask in Jesus' name. Amen. In the name of the Father, the Son, and the Holy Spirit. Amen.
All right, thank you, Marilu. So, how's everybody doing on a Saturday night? Everyone enjoying the weekend? Spending your weekend with borderless accountant, learning QuickBooks, bookkeeping.
Still working.
Ina-career na natin ang pag-bookkeeping. Right? So that we'll have healthy pockets very soon, as per Marilu. That would be
Sinama
amazing.
talaga sa prayer.
That'll be nice, right? To have healthy pockets. Inaantay po mag 7 p.m. habang nagtitinda sa tindahan, sabi ni Charlene. Ano bang tinitinda mo, Charlene? Yung isa yun ang nagsabi, nagtitinda daw siya ng laptop. I lost his name. Retail store. Right.
Joseph, selling laptop. Si Joseph, please.
Si Joseph yung nagsisell ng laptop. Yung si Charlie naman, retail naman yun sa kanya. Siguro mga bigas, mga delata. Anyways. You guys have been practicing the word file that we have, the working file that we have. It should be workable for you guys. Like play around the transactions, and then I would suggest that you create a copy and then copy the transaction from scratch, and then build your trial balance, build your create your adjustments, and then eventually the profit and loss and balance sheet, right? Because listening to or not listening, but joining this session without actually doing the application may not necessarily bring you the best understanding, right? So, importante pa rin talaga yung we practice things that are shown to us or demonstrated before us. Okay, so I hope that, whenever you have the time, try to recreate the work file and see if that makes sense for you. Because, like, for example, si Sherilyn, may tindahan, she can use that. Sherilyn, you can use that template to build your profit and loss and your balance sheet, right? Like, you can record all your sales, all your purchases, and your expenses so that you will have a good picture of your financial performance for the month or for whatever period it may be. And as for us, we're using that same template for the cafe that we're building so that I get the financial standing of the business pretty quickly, right? Because if I do it in QuickBooks, it'll be expensive, right? Because QuickBooks, you'll have to pay for the subscription. And maybe as we go along, we will use QuickBooks. But for now, when there's barely any activity with the business, it might be too impractical to use or to subscribe to QuickBooks or any accounting software. So yeah. All right, soft drinks yung tinitinda mo, Sherilyn. Well, nagkakinig po ako habang nagluluto ng pansit dito sa Barcelona. Barcelona, Spain. 1:02 p.m. pa lang po here. Oh wow, Belle is in Spain. I'd love to go to Spain next year. I want to go to Spain. I've been exploring the option of a digital nomad visa for Spain. I may get one. I don't know, but I'd love to go to Spain.
Sige po, antayin kita dito. Meet tayo.
I'd love that, Belle. I have a friend also in Portugal, in Porto. I'd love to visit her too. I heard Spain does not have the harshest winter in Europe, so maybe November, October, around that month, it's possible to travel to Spain. Wow,
Okay.
amazing. We'd love to get to know you, Belle, at one point. It's exciting, no, that we are all over the world already. So we have audience as well in the US. Like if I go to YouTube and look at the statistics of the audience of where our audience are watching us from, I see a significant amount of people joining us from the US. So that's just so amazing. We have truly embraced the word borderless, right? So Belle, welcome. I don't know if it's your first time, but it's my first time to see you participating in the chat. Maybe you have.
Lagi po ako nakikinig. Siguro po mga 1 month na binigay nung friend ko sa Pilipinas.
Oh, wow.
Yung kilala niya, sabi niya kilala daw kasi niya yung, hindi ko po alam kung ikaw mismo, Ruth, dating Ginoo po.
Ah, okay, Ruth. I used to work with Ruth in Makati. So Yeah, she messaged me about that too. Regards mo ka kay Ruth. Ruth is
Sige
very
po, thank you.
Are you an accounting professional, Belle? I'm just wondering.
Opo, sa Abu Dhabi po ako for 11 years. So, ang hirap ditong makapag-work, kaya lahat po ng mga free online, sinasalihan ko po. Nakikinig po ako kasi ang hirap po dito kasi hindi is English speaking po ba. Kaya nag-aaral pa po ako ng Spanish at saka Catalan dito sa Barcelona. So, nagtatry po ako kung may chance makapag-work online. Ganun po, kaya po sumasali po ako at nakikinig. Accounting graduate po ako pero hindi CPA.
Ah, nice. Belle, try to explore expat tax. So if you are in Barcelona and as well as like malapit ka na sa Portugal eh. Those countries, ang daming diyan, ang daming mga expats, mga Americans who retire
Opo.
to those countries. Especially Portugal kasi Portugal medyo okay yung tax regime nila doon. Friendly sa mga retirees. If you study the individual taxation, yung nasa YouTube na mga it's a good start for you. And then you can choose to focus on expat taxes. Parang gawin mo siyang niche ba? Expat taxes. So you can go and market yourself as someone who's doing expat taxes. Malaking market yan.
Sure ko po yung YouTube. Thank you po. Kasi hindi ko pa rin po nababalikan masyado yung YouTube.
No problem. But yung yung individual taxes natin, hindi siya focus on expat taxes, but it's a good start for you. So if you're able to digest all the contents there, and then after a while you will focus on expat taxes, it's gonna be great for you. Again, if your target is direct clients from from Spain, or if you expand to Portugal as well, eventually you'll meet networks, kumbaga ba.
Sige po. Okay, thank you po.
All right, thanks, Belle. Nice to meet you.
Thank you po.
And sino ditong aside from Belle na nasa ibang bansa? I know we have Lou from Qatar. Kasi marami na tayo from other parts of the globe. It's amazing. Now, without further ado, let us start. Unless may gusto mag-share anything that you would want to bring up before we start, you are welcome. And I don't know, but for some reason I can hear myself. People at the lower floor of the office, your volume is too high. I can hear myself. So maybe consider turning down the volume, because it's kind of
Copy, Chris, copy.
it's kind of weird hearing myself like as an echo.
Sorry.
That's all right. No problem at all. Right. So by the way, good news to everybody who would want to follow us outside of the 7 to 9 p.m. We have already purchased our beautiful wireless camera. So starting tomorrow, maybe not tomorrow, starting Monday, we would broadcast ourselves live every 1 p.m. So I don't know if it's going to be the same Zoom link. We'll check with Kelly and the rest of the team if we're going to be doing the same Zoom link, so that you can join the broadcast as you like, as you wish. And if you feel like communicating with us or asking us questions, if you see us available, then you can, or we'll just hang out, talk about anything. And this could be our EOP room, right? EOP, the English only policy room, so that everybody who joins in the room must speak English. Right? We must speak English, because guys, we're not only going to be investing ourselves in terms of bookkeeping and tax, because no way you are going to succeed in the US tax and accounting profession if you don't know the language, right? Or if you're not comfortable speaking the language, it's a must for you, right? It's a must for us to be able to get a really good command of the English language, because we will be talking to English speaking people, right? So if we want to grow, of course you can get clients if you're not really good at English, but if you want to grow, build a firm, you know, get really good clients, number of clients for that matter, you have to have a really good comm skills. And we can only achieve that if we practice, right? So if we are in a room where we are compelled to speak in English, maybe it's a good start, right? And in our community, we don't discriminate, we don't judge, we act foolish, we act stupid. That's okay, right? We can be ourselves, right? What do you guys think? Is that a good idea? Magre-reporting po kami. Yeah, maybe Kelly can do reporting every day. Anyways, am I sharing my screen? Am I?
Not yet.
Not yet. Okay. Alrighty. So today we are gonna proceed where we left off from yesterday. It was pretty intense discussion yesterday. It will most likely be as intense today. So just stick around. Alrighty. So still we're at the bookkeeping basics and we're almost done. I think we can get this done by today, because we've already covered yesterday most part of the steps 3 to 5. So by now, I think it would be solid already in your head about the steps in the accounting cycle, which is again the analysis, the recording, the adjusted trial balance, the adjustments, as well as the adjusted trial balance, right? So that should be solid in your head right now, so that even if you're using the automated accounting software, those would not get lost in your head, right? Because having I forget who said that, there's an advantage if you know the book's manual, if you know the manual accounting or the manual bookkeeping, right? Because you understand how the software is actually working in the back end. So, and that's what we're actually doing. All right. So summary activity, it's weird, no? We start with the summary, but I think this is where we left off yesterday. Setting the scene, your client, a knitting supply store, has reached the end of their accounting period and needs your help preparing the unadjusted trial balance, recording the adjusting entries, and preparing the adjusted trial balance. All right, I think we covered this yesterday, haven't we? We've covered that too. Adjusting, I think we did this too. We did this as well. Yeah, we did the reflection as well. So we're done with the reflection. So let's just continue here. So did you consider adjusting entries affect profitability, the financial statements, and can have implications for a business? Depreciation entries reduce profits by recording additional expenses, while recording prepaid expenses as assets increases profitability. Inconsistency in applying adjustments is therefore crucial for reliable records and financial statements. So again, adjusting entries will affect profitability, right? Because it could overstate or it could understate the income, right? As it should be, including the balance sheet. So if you don't depreciate, your balance sheet may appear higher than they should be because the assets section is overstated, right? So if you don't do if you don't do adjusting entries and adjusted trial balance, you went straight from unadjusted trial balance all the way to preparation of financial statements. You will be misrepresenting those statements, right? Misrepresenting, that means it's not presented as the financial statements are not presented as they should be, right? It could be misleading. So that's why you have to go through all the steps in order for you to present a financial statements that is truthful, right, or accurate. how do adjusting entries help make the financial statements more accurate in accrual accounting? All right, this is where I need your help. So how do adjusting entries help make the financial statements more accurate in accrual accounting? Is it A, adjusting entries are made to more accurately estimate how much cash the business has at the end of the accounting period? So this is not it, because this is more of a cash flow statement, right? Next, adjusting entries ensure that revenues and expenses are properly recognized and recorded in the correct accounting period, leading to more accurate financial statements in accrual accounting. This could be that answer, but let's look at the third option. The third one says adjusting entries are made to adjust the value of any land the business owns based on the current market value. So this is not correct, because this is a revaluation, right? This is a process of revaluation. So the most likely answer would be letter B. Adjusting entries ensure that revenues and expenses are properly recognized, and then it's recorded in the correct accounting period, leading to more accurate financial statements in accrual accounting. Okay, so if you don't do the accrual, the financial statements will not be true at a given period, right? Let's say the accrual and the deferral. If you look at it, pwede namang hindi ka mag-adjust because it's the same business anyway, right? But on a given month, like on that year where you were supposed to recognize prepaid asset, on that particular year, you are basically overstating your you are understating your income statement, right? Because hindi ka nag-recognize ng asset, all of the prepaid rent you recognize as an expense, right? So if that was for the year 2025, that means on 2025, your expenses are higher than they should be. And when the expenses are higher, your income is lower, right? So the income statement shows a lower amount of income. However, on the next period, it will have an offsetting effect, right? So in the next year, given that same transaction, because hindi ka nag-recognize ng asset on the first year, ginawa mo siyang expense, on 2026, your expense would also be understated. So understated yung expense mo, overstated din yung income. So in 2025, understated yung income. On 2026, overstated naman yung income, right? So there is an impact on the period, right? So it does not truly, the financial statements do not truly represent the result of the business activities on that given time period. You get what I'm saying? So that's the premise of this answer. Let's hit submit. And great job. Adjusting entries ensure that revenues and expenses are properly recognized and recorded in the correct accounting period, leading to more accurate financial statements in accrual accounting. Let's continue. So remember, when adjusting entries are made as they are intended to match expenses to revenues, when adjusting entries are made as they are intended to match expenses to revenues earned within the period, they can have an impact on the profitability of the business. It is therefore important to make adjusting entries prior to preparing financial statements, right? Let's proceed. So show what you know. So this is the time where we show what we know, right? We use this, we do this all the time. Tulungan tayo i-overcome tong 8 questions. Okay, first question. Financial reports should be produced after any have been made, right? So is it adjustments, invoices, gross profits, equities, right? It should be after adjustments, right? It cannot be after invoices because this is the recording. When you do invoices, you are on the step 2. Gross profits, this is shown in the financial statements. Equities, I don't know, it's irrelevant. So the answer could only be letter A, adjustments, right? Are we all in agreement? I think we are. Hit submit. So correct. Before producing any financial statements, adjustments should be made and an adjusted trial balance should be created, right? Next, After the unadjusted trial balance is created, the process of updating the information for the accounting period is known as, is it making changes? Is it making adjustments? Is it making corrections? Or is it making substitutions? So after the unadjusted trial balance now, right? Answer should be, let's see your answers. All right, answer should be letter B, right? After the unadjusted trial balance is the making of adjustments. Let's hit submit. And correct. So after creating the unadjusted trial balance, necessary adjustments are made to correct or update accounts to accurately reflect current revenue and expenses for the accounting period. All right. Third question. The document that shows all of the account balances after adjustments have been made is known as, is it the unadjusted trial balance? Is it the general journal? Is it the general ledger? Or is it the adjusted trial balance? So answer is letter D, right? So this is the fifth step, right? So after the adjustments follows the preparation of the adjusted trial balance. All right, so let's hit submit, and that is correct. The adjusted balance shows the total account balances after adjustments have been made. Fourth question, your client provided a service to a customer and they have yet to pay. So hindi pa daw nagbayad yung client, right? Now the accounting period is ending today. Which type of journal entry will need to be made? So you already rendered your client already rendered the service, yet the customer has not paid, right? And you have to make an entry because the accounting period is about to end. What entry are you making? Is it a deferral? Is it an accrual? Is it a missing transaction? Or is it a tax adjustments? Right, so deferral, we already known that yesterday, it's related to recognition of a liability, right? So you receive cash in advance for a service that you have not rendered yet, so you don't consider that as an income, rather a liability. A missing transaction, di naman, it's irrelevant. It's not a tax adjustment because tax adjustment likely relates to depreciation, right? So it could only be an accrual. Accrual meaning you will recognize a receivable and an income at the same time, right? Because in accrual, you recognize income when it is received, income when it is earned rather than when received, right? So earned rather than received. So submit, I think everyone's in agreement. Correct. So an accrual concerns future payments or expenses. When a product or service has been delivered to a customer and the customer has yet to pay, the revenue has been earned and should be reflected on the books. This is accomplished through an accrual adjusting entry. Right? Next question. A customer paid in advance for a service. The work has not yet been started and the accounting period has come to an end. Which type of journal entry will need to be made? So ito naman yung opposite ng kanina, right? So this is a liability because again, the customer already paid in advance and the client has not yet rendered the service, right? This is an advance payment. So this is a deferral, right? It's not an invoice, it's not a credit memo, and it's not an accrual. It relates to a liability. Therefore, it's deferral. Everyone's in agreement? Yes. We are correct. A deferral adjusts transactions to the appropriate time period. When money is paid in advance for work that has not yet begun, it is deferred to a future accounting period when the work is performed. This aligns the revenue with the corresponding work and ensures accurate financial reporting. Right, sixth question. What is the depreciation of a vehicle entered as? So what is the depreciation of a vehicle entered as? Is it a decrease in expense? Is it a reduction in revenue? Is it a missing transaction or is it a tax adjustment? So it would be a tax adjustment, right? It could be misleading because, or it could be confusing because it also is a reduction in revenue, right? Or a reduction in income, right? When you depreciate, because depreciation is technically an expense, right? But there's a best answer, which is a tax adjustment, right? So submit. And we are correct. Depreciation is a common tax adjustment and is determined by the accountant or the CPAs. It is typically added once a year. Right, next, last two questions. It is always the blank responsibility to identify and make adjusting journal entries. Select all that apply. Is it the bookkeepers? Is it the accountants? Is it the CPAs? Or is it none of the above? So sabi, it is always the responsibility to identify and make adjusting journal entries. This is kind of confusing because the material clearly says it's the accountants or the CPAs. It does not include the bookkeeper. Is it? Does it? Kasi but the bookkeeper is only up until the unadjusted trial balance, right? And according to the materials that we have been covering, the adjusting journal entries are usually done by the accountant or the CPA. So do we say B and C, or do we also include bookkeeper? What do you guys think? Or are we gonna stick with A, B, C? Because if I'm gonna answer it, it's gonna be B or C. So include bookkeeper, sabi ni Rina. B or C. So it is always the blank responsibility to identify and make adjusting journal entries. Select all that apply. Right? Kasi kung in reality, kung walang CPA, walang accountant, si bookkeeper yung gagawa, right? Which happens a lot. Na yung bookkeeper siya din yung CPA or siya din yung tax preparer. So maybe that's the premise of this question. So A, B, C. I'll follow you guys. I'm not sure, but if I'm just going to answer it strictly, it's going to be accountants and CPAs only. Serena kasi sabi niya, pwede po kasi niya makita yung error firsthand. Yeah, makes sense. Submit. Correct. All right. Mali na ako. So typically, an accountant or CPA will identify the need for adjusting entries, but the bookkeeper is most often the one who actually records. Okay, makes sense. So the accountant will identify, and then the bookkeeper will actually do the recording. Okay, I get you. All right, good job for those who answered A, B, and C. I would have made a mistake. But that's life. We learn from our mistakes, don't we? We don't need to be perfect. Last question. Adjustments should always be blank so that it is clear which accounts were affected by the transaction and by how much. I don't understand the question. I'll read it again. Adjustments should always be blank so that it is clear which accounts were affected by the transaction and by how much. So is it marked? Is it totaled? Is it credited? Is it debited? Is it totaled? Marked? I don't know. Adjustments should always be marked. Okay, so that it is clear which accounts were affected by the transaction and by how much. Okay, marked, kasi I don't know what total doesn't make sense. Credited, debited doesn't. Mark would be the answer, right? I think you guys are all in agreement. So let's submit. And we are correct. So it is important to clearly mark your adjusting entries when notes, with notes. Ito pala yun yung remarks. Adjusting entry, mark them with notes that specify the affected accounts and the corresponding amounts. This ensures a clear audit trail for future reference and understanding of the entry. Right, ito sa QuickBooks, ito yung mga memo, right, or remarks. So let's hit next, and voila, another 100% score. Good job, everybody. Let's continue. Congratulations. So you're one step closer to being a bookkeeper. By making adjustments and preparing the adjusted trial balance, you uphold the integrity of the accounting cycle, ensuring an accurate matching of revenues and expenses. Your exploration of the adjustment process has deepened your understanding of these crucial steps, enabling you to maintain accuracy and reliability in financial reporting. This helps build a solid foundation for your career as a bookkeeper. establish a solid foundation, right? So I hope by now you appreciate why we're doing this, right? Because we could have just jumped into navigating QuickBooks Online right away, how to do invoicing, how to do bill, how to receive a payment. We could have done that right away, right? And just spend few days. But why are we spending about 3 weeks now, knowing about the 6 steps in the accounting cycle? Because guys, we're trying to build a solid foundation, right? And for anything to be sustainable, it has to be built on a solid foundation, right? So that again, when you're doing the books of the client, maiiwasan natin yung mga mistakes, mga errors, and that would help save the client from getting penalties from the IRS, right? So to receive the completion credit for this module, select submit. All right, so steps 3 and 5 were done. Amazing. So let's see what's next. Let's just take a look. All right, guys. So step 6 is done, and then we will have the summary and we'll have the practice exam. Right. So try natin nang tapusin tong tatlo. Right. So I think after we're done, we're gonna be done with bookkeeping basics. So we can move on to the next lesson. Right. Anyone wants to share how they feel so far? Is it good, guys? You now have a good grasp of the accounting cycle and why each of the steps matter, right? Because guys, you would not be able to do this in QuickBooks anymore, right? Those steps, you would not be able to do those anymore because again, QuickBooks operate in a different manner. It's menu driven, but if you don't understand the premise and the principles behind them, it's easy to get confused, right? And it's easy to just, go and operate like a robot following, the house and not knowing the whys. All right. Thank you, Annalisa. It's a refresher course for me. Yeah, it is for me too, honestly. I have a small gist of accounting for now. Yeah, good. Right. Hindi naman kailangan lahat 100% agad. All right. So, yeah, it's good to learn the basics again. Right. I too can relate. All right, let's move on to the next step, which is the preparation of financial statements. Let's start this module. So completing the cycle. At the end of the financial cycle, you will complete the accounting cycle by closing the books and completing step 6, or the preparation of financial statements. Guys, pang last na tayo, right? Aren't you proud of yourselves? We're down to the last step. So there are 4 main financial statements to prepare. The income statement, or also known as a P&L, the balance sheet, the statement of equity, and the statement of cash flows. Today, we'll give a brief overview of the financial statements, and later we'll dive deeper into each of the statements. So like the usual, we're going to skip the glossary. Let's just move on to the second lesson. So what's involved with closing the books, right? A lot of times, na-mention natin tong closing of the books, right? Closing of the books, that means no further entries are supposed to be made anymore, right? No more changes, no more entries, because the books are closed. So closing the books. Before preparing the financial statements, you reach a point where you decide no more changes or adjustments need to be made to any of the account. At that point, you will close the books for the accounting period. Let's explore this process and gain understanding of what's involved by watching the following video. Alrighty.
At the end of the financial cycle, before you end the accounting period, you will come to a cutoff point where you decide all entries are complete and nothing else should be added to the accounting period. At that point, you will want to make sure that everything in the accounting period stays as it currently is. This process, known as closing the books, helps maintain the accuracy and reliability of the statements. To ensure readiness for book closure, review all the previous steps of the accounting cycle and address any outstanding issues, such as reconciling errors or inaccuracies. Once the books are closed, any additional changes would need to be made in the current period rather than in the closed one, to avoid affecting the financial statements. Many software programs offer a feature to lock the books, providing a warning message so you cannot accidentally make changes after the books have been closed. Remember, once the books are closed, you should not make any further entries to that accounting period, as it will impact the financial statements.
Right. So closing the books is one step towards protecting the entries so that once the income statements, the balance sheets are reported to the stakeholders like the owners and the IRS, especially for that matter, no more further changes because it's made final, right? And imagine if the profit and loss that was reported to the IRS is no longer the same as the profit and loss that you have in the books because you did not close it after the end of the year. You continued to record transactions. You continued to make adjustments in the books, right? So the following year, it's going to be a mess on the part of the tax preparer because now your prior year return will no longer match with your prior year financials in the books, right? So that's why the books have to be closed to make sure that no further entries are going to be made into that, right? Question, do you necessarily close the books as of December 31? Well, not necessarily, right? Because usually tax returns are done either March 15 or April 15, right? And some even have extensions all the way from September 15 to October 15. So minsan, adjustments are done even as late as September, right? Especially for businesses. So in practice, the books only gets closed once the tax return is finalized and filed before the IRS, right? So as to when we're going to close the books, the answer to that is it depends, right? It depends. Do you understand? But it's usually after the end of the accounting period and usually after the end of the year. Make sense? Do you have any question, clarification, or reaction to that? All right, now let's go to the first financial statements, the income statement. So, is the business making money? Income statement is also known as a profit and loss statement. The income statement shows the business's revenues and the expenses during a particular period. The income statement is a crucial tool for businesses as it shows the business's profitability by detailing its revenues, money in, and expenses or money out. Let's explore this important financial statement in the video that follows. All right, let's watch this video.
The income statement provides a snapshot of a business's financial performance during a specific time period. It includes the total revenue, which is all of the income generated from sales of goods and services provided. It accounts for the total cost of goods sold, which represents the total expenses directly associated with producing the goods or services that generated the revenue. It calculates the gross profit, which is the result of total revenue minus cost of goods sold. The income statement also includes any other business expenses incurred during the reporting period, such as rent, salaries, and advertising costs. By subtracting the total expenses, including taxes from the revenue, the income statement reveals the resulting net profit or loss for the business. This statement is crucial for evaluating the financial health and profitability of a business.
All right, so P&L is very straightforward, statement of profit and loss. So, this is the report where I would say this is a go-to report for a businessman to know if he's making money or not, right? The income statement. So in the video that follows, we'll hear from a bookkeeper how about his financial statements helps her inform her clients about their business's profitability. So let's play that video.
My clients, Raj and Susie, own an ice cream shop, and they know that their income can fluctuate seasonally. Last year, they experienced an unseasonably cold summer, and felt that there was a downturn in business due to the weather. However, they also sold coffee and donuts and catered some parties during that unseasonably cold summer. So they weren't sure if they lost income or came out ahead. To help them understand their financial situation, I introduced them to the income statement. The income statement is a really useful tool to gauge where your company stands. It can show your expenses and what money you've brought in. It can be used to track loans for a business, or something as simple as, I want to know how I did during a certain period. So Raj and Susie thought they had lost money, but looking at the income statement, I was able to show them that they had actually turned a profit. Despite the chilly temperatures, with their additional income streams, their business had stayed fired up.
Right. So let's put this into context in actual practice, right? So a lot of times, the income statement is provided very, very late by a bookkeeper, right? Also because most of the time, the business owner do not provide the transaction reports or transaction receipts, bank statements, for example, because they don't really look at the income statement as something that they can draw a decision upon on a monthly basis, right? In a localized setting, for example, if you go to businesses, they don't have financial statements, right? They cannot produce an income statement right away because either they don't have records for it or they don't just make the transactions recorded, right? So in Bisaya, when you come to or when you go to a businessman and you ask if he's making profit or not, he would probably say, yeah, maybe I'm making money. It looks like I'm making money, but how much? He cannot tell you, right? Because it's bana-bana ra, right? It's like an estimate, right? Or if he looks at the bank statement, he sees that there is a cash balance in the bank. So that's probably what's giving him confidence that he's making money, right? But as to how much exactly is he making, he would not know, right? Unless he has the financial statements, particularly a profit and loss statement. And again, the problem a lot of times is that transactions are not recorded real time, right? So it takes many, many weeks, many, many months before the transactions gets recorded in the books, right? And most of the time they use the profit and loss only during the tax period, right? That's why they rush on doing catch up bookkeeping at the end of the year, and they lose the opportunity to make informed decisions during the course of the year by looking at the financial statements. And I would like to share with you one example that really made me realize that, I'm very thankful that I took up accounting, because when I was running a business back in 2017 all the way to 2019, so I spent 2 years of my life running a business. And because I was recording all the transactions timely, I was able to make graphs of how the business was growing. And I've been seeing that the business, while it's making money, but it was only breaking even, right? It was only able to pay all the necessary expenses. And I've been tracking the performance, and every time I feel like I want to increase sales, I do something about it. Like I do promotion, I do something that could help increase the sales of the business. And right away, after like few days, I would already see the turnout of what I have done if it resulted to a good number of sales. Reason for that was because the store was using a POS, right, or a point of sale. With the point of sale, your sales are recorded right away in the computer, and so all you got to do is to collect all the expenses slips, and then you record them in Excel, and then you would know right away how much you made during that particular day. Are you hitting your margin, or are you hitting your target, right? And I've been doing that for 2 years, and after 2 years I realized this is not gonna cut it, right? It's not gonna cut it. It's not gonna make money, right? So that's when I started to explore about finally taking the CPA exam, because no way the business is gonna survive. It's gonna die, right? And so before it eventually died, I already took the CPA board exam in 2019 and eventually passed it. And the good thing was that I mean, it was still running because I had people running it and I would just get reports every day. But then the pandemic hit us, right? So eventually the pandemic put a final blow into the business. And luckily, when the pandemic happened, exactly in February of 2020, I got into a job as a tax preparer, as a US tax preparer. So imagine that. If I was not seeing the financial reports on time, I would not have made that timely decision to change career again, right? And so that's the beauty of financial statements, guys. It makes you make a decision, right? And a lot of business people disregard this, and also a lot of bookkeepers are not seeing the value in it, so that when you go to, or when you eventually work for a client in the US, one problem that you will be encountering is that clients are not responsive, right? They will not respond to you about requests for bank statements, credit card statements, questions about the uncategorized transactions in their books. And again, because they do not see the value in financial statements. But you know by now how valuable it is, right? So it is now your challenge to come to your client and tell your client that, hey, client, I would want you to see how your business made, how much your business made in these months. So I would like you to, be able to make your decisions based on financial statements rather than hunches, right? Or rather than estimates. And I'll be glad to prepare for you a financial statements and give you a P&L every, let's say you commit yourself to providing him a financial statements every first week of the month, every first week of the following month, right? And so you project that as if you are doing him a favor, right? Because if you continue to just ask, client, I need your bank statements, client, I need your credit card statements, client, I need your confirmation about these transactions, without actually phrasing that so that the client would know what's in it for him to provide you the statements on time, right? You know what I mean? Because you do not also know yourself that you are actually doing him a favor by recording his transactions on time and providing him the financial reports on time, right? You get what I'm saying? It's how you package your communication with your client. Because again, a lot of us are just actually seeing the work as mere work, right? When you say mere work, you will look at yourself as just a mere worker rather than a partner in the business, right? You're a partner in the business because imagine you're providing your client the information that he needs for him to be able to make that decision related to his business. You get what I'm saying? So I hope you realize that by now how valuable our profession is as bookkeepers or accountants for that matter. You get what I mean? And I'm sure marami dito sa inyo nakaka-relate. Like some of you who are running a business and we don't do financial reports on time because we're so busy, right? And we make estimates, or sometimes we just forget about it and then we take care of it at the end of the year. We have lost the opportunity to make decisions, on a timely manner. Right? Because again, the issue is about the recording of the transaction. Di natin alam, there is a way, right? The one that we showed, I'll just show this to you now. This template, again, you can use this to record transactions as they happen, right? So this is a template, right? So every time you add to this transaction, your financial statements actually gets updated on time, right? So you get updates on your unadjusted trial balance. Your adjusted trial balance also gets updated when you do adjusting entries, and so does your financial statements, your income statement, your balance sheet, your maybe not cash flow, but the P&L, the balance sheet gets updated almost automatically, right? So later on, we will show you how you can use this further to make a breakdown of the income statement on a monthly basis, right? But this is a good way for you to start, right? Do your bookkeeping, in Excel or in G Sheet, right? So the more that in every transactions that happens after end of the day, if it gets recorded, you get a running profit and loss statement. You know what I'm saying? And you get a running balance sheet. So if at one point you want to know how much your cash balance is, you can almost see it real time, a real time balance. An accounts receivable, you would also almost always see an updated balance, right? And that depends how timely you do your recording. You get what I'm saying? So if you do that, do it in Excel, right? And do this, explore this formula so that you can make use of a timely financial report. Because if you do it on notebook or a columnar or anything like that, it's going to take you a while to produce a profit and loss in a balance sheet statements. You get what I'm saying? So yeah, I'm glad Neri is finding the formula really, really useful. Right, so that's just the point. I hope that you're getting it. So example of an income statement. The following is a simplified version of an income statement. You can see that the formula, the report is built upon, the following is a simplified version of an income statement. You can see that the formula, the report is built upon, okay. So you can see that the formula, the report is built upon is total revenue minus total expenses equals net income. Right, so this is your income, your total revenue, less your cost of goods sold, meaning cost ng binenta mo, then results your gross profit. Okay, and your gross profit, less your total expenses is your net income. So let's test your knowledge on the terms associated with an income statement. Can you demonstrate your understanding of these terms? Glossary. So the amount of revenue from the sale of goods and services, what is it? Is it cost of goods sold? Is it total income? Is it gross profit? Is it net profit or income? What is it, guys? So the amount of revenue from the sale of goods, right? So it's not cost of goods sold. It's not gross profit. It's also not net profit. So it is total income. Right. So let's continue. The total cost to create goods, income was received on. Is it net profit? Is it total income? Is it gross profit? Or is it cost of goods sold? What's your answer, guys? It is cost of goods sold, or otherwise known as COGS, right? That's next. Total revenue minus cost of goods sold is gross profit, right? And then lastly, the total of subtracting all expenses, including taxes, from the total revenue is your net profit, right? Good job. So you're working with Greg's landscaping business. Greg has provided you with the following information from last month's sales and expenses. Total revenue is 13,542.64. Total cost of goods sold 510 and total expenses 5,194.09. Try it out. In the following activity, use the drop-down menus to select the appropriate values to calculate the gross profit and net income in the excerpt from the income statement. When you are finished, select Submit. All right, to download the file, select the spreadsheet file name. Meron pala tong mga ano. Huwag na natin i-download yan. So the income statement, Craig's landscaping business from December 1 to December 31. Total revenue is 13,542.64. And then your total cost of goods sold is 510. Therefore, your gross profit is basically just 13,542 minus 510, right? How much is that going to be? About 1332, right? And then your total expenses is 5,194. So 13 minus 5,000, that's roughly about 8,000, right? So, or 7,000. Is it 7,838 or 7,383? How much is it? This is where I need your help, guys. How much is it?
838 po. 783.
7,838, right? So basically your gross profit is your total revenue minus cost of goods sold, and then your net income is your gross profit minus your total expenses. Okay? So that's correct. Knowledge check. Review the sample income statement, then answer the following questions. So sabi dito, total income is 9,809.52, total cost of goods sold 405, gross profit 9,404, total expenses is 7,819.31, therefore net income is 1,585.21. Let's look at the questions. Based on the information provided, which statement is false? So is it that the business had fewer expense costs than gross profit? The business had fewer expenses than gross profit. So fewer expenses and gross profit, this is correct, right? So expenses is lesser than gross profit, so this is correct. The net income indicates an increase in equity over the period. This is also correct because the net income or the income is a component of equity. The net income indicates a decrease in equity over the period. So this is incorrect. So it should be an increase rather than a decrease, right? So are you guys in agreement? Marlita says third statement is false. All right, let's hit submit and voila, that is correct. So fewer expenses than gross profit to help the business make a profit over the period. And as a result, both net income and equity are increasing. Now, that's it for income statement. Everyone gets that. Naiintindihan naman yung income statement. It's fairly easy to understand, right? Statement of your profit and loss. And you may be confused, why is there a gross profit? Bakit hindi na lang dumiretso sa income state as a sales minus expenses and the net income? Pwede naman, right? But most of the time, we separate cost of goods sold because those are expenses, or not expenses, those are the costs related to the sale of goods, right? So later on, once you study advanced accounting, you will come across the term margin, right? Yung margin, yun yung patong mo sa sales, right? So normally you would want to take a look if you are maintaining your margin, and you can only compute your margin if you have separated your cost of goods sold, right? If you don't mix your cost of goods sold with your expenses. But again, that's for an advanced accounting topic. But again, if you're wondering why there's cost of goods sold, it's for margin calculation. Okay, we may be able to cover that, I don't know, at some point during the lesson, or during this course. So remember the accounting equation. The balance sheet is important because it shows what the business owns. That's equivalent to the assets. And then what it owes, the liabilities, and the value of its owner, value to its owners at a specific time. Let's explore the various aspects of balance sheet in the video that follows. Right, so let's watch this.
The balance sheet is a financial statement that shows a business's assets, liabilities, and equity at a specific point in time, following the accounting equation. It's like a snapshot of your business on a given day. It helps track what the business owns, assets, what it owes, liabilities, and the remaining value to the owners, equity. Remember, assets also include a business's capital, which represents the monies the business uses for operations and growth. When not using software, the balance sheet should be set up with the assets on the left, liabilities, and equity on the right. But when using accounting software, the balance sheet may appear as a single list. The balance sheet is built on the fundamental accounting equation: assets equal liabilities plus equity. The first part of the balance sheet shows the business's assets, representing anything the business owns of value or any business resource of value that has the potential to be transformed into cash. This section of the balance sheet aligns with the left side of the accounting equation. It begins with the most easily accessible or liquid assets, such as cash and bank accounts, followed by accounts receivable, which represents what customers owe the business. Other assets, such as physical assets and long-term purchases, like vehicles used by the business over several years, are listed afterwards. It also includes unrealized gains, which are the theoretical profit that a business will receive when they sell a stock, commodity, or make a currency exchange. These must be recorded on the balance sheet until they are sold, and the profit can be recorded elsewhere. The second section of the balance sheet is about what the business owes and its financial resources. It includes liabilities, which align with the first portion of the right side of the accounting equation. Liabilities represent what the business owes to external parties, like accounts payable. This can include current liabilities, which are immediate obligations such as unpaid bills, credit card balances, or lines of credit, as well as long-term liabilities, such as larger loans that take years to repay, like business or car loans. The last part of a balance sheet is equity, which represents the value of the business from the perspective of its owners. It reflects what the owners would have left if they sold all assets and paid off all debts. Regular monitoring of the balance sheet is crucial for maintaining the overall financial health of the business.
Right. Anyone wants to comment about a balance sheet? Anyone wants to share anything? Questions about balance sheet? Not really. So again, let's just continue. Try it out. In the following activity, you'll find an excerpt from the balance sheet. Use the drop-down menus to select the appropriate values to complete the balance sheet. When you are finished, select Submit. To explore the full balance sheet, open the attachment. So we already have an example of a balance sheet. Let's not open that spreadsheet anymore. So this is how a balance sheet looks like. So you have total assets, then you have your total liabilities, and then you have your equity. So your total liabilities and your total equity should match with your total assets, right? But in this example, you just simply compute the total of 17,712.27 and total fixed assets of 28,971.81. You'll come up with your total assets. So how much is it, guys? Based on your calculator, 684.08. All right. So your total assets is 46,684.08, and that should also equal your total liabilities and equity, correct? So they should match. All right, so just simply have to total that. Hit submit. Continue. Correct. Great work. Example of owner's equity. Let's look at an example to illustrate the concept of owner's equity. Why is there no? So total assets of 52, total liabilities and equity of 52. And suppose a business currently owns assets worth 52,234.96. If the business sold all these assets, it would first need to pay off its external obligations or any debts outside of the business, which in this case is 18,068.27. The remaining money after settling all the debts represents the value of the business to the owner, which is 34,166.69. This is the amount the owner gets to keep or the owner's equity. Another example of owner's equity would be if you buy a house, right? If you buy a house on loan, right? So you will typically pay a down payment, right? And the rest of the money or the rest of the price of the contract price of the property, you will take as a loan from the bank, right? So let's say 1 million yung property, you made a 20% down payment. That down payment becomes your equity, right? And then the remaining balance is your loan, right? And so if you sell the assets, let's say at 1 million then, so babalik sa'yo yung 20%, which is the 200,000, the 800,000, you will pay that back to the bank. You know what I mean? But over time, mag-i-increase yung equity mo because you will be paying the amortization, right? So that's a classic example of what equity is. It's like the residual amount in the business, like the residual Yeah, after all the business assets are sold, what remains would be the equity of the owner. Make sense so far?
Yes po.
It's the residual interest, sabi nga ni Marlita. Now let's check. Which of the following statements about a balance sheet is false? Is it that total assets should always be the same as total liabilities plus equity? So false yung hinahanap. Total assets daw should always be the same as total liabilities plus equity. This is a true statement, right? Next, the balance sheet provides a snapshot of the business at a particular point in time. This sounds to be correct as well. The balance sheet gives the most complete picture possible of a business's financial position. This is also correct. The balance sheet is structured in the same manner as the accounting equation. Assets equals liabilities plus shareholder equity. Wait, parang tama lahat. False. Ano daw yung false? Total assets should always be the same as total liabilities plus equity. That's correct. Next, the balance sheet provides a snapshot of the business at a particular point in time. Tama naman to. Next, the balance sheet gives the most complete picture possible of a business's financial position. Sounds correct naman. And the balance sheet is structured in the same manner as the accounting equation. Assets equals liabilities plus shareholders' equity. Bakit? Di ba financial position naman yung binibigay ng balance sheet? Or is it not because it's not the most complete picture? Okay, it's dahil sa most complete. Para ni QuickBooks, no? Ano ba siyang paganyan? Or the balance sheet provides a snapshot of the business at a particular point in time. Hindi ito. Parang ito ay para sa P&L. I don't know, is it B or C? Majority sa inyo C eh.
C.
Okay po. Sa C daw. Okay, let's hit the C. But I'm not sure. It could be this or this. I don't know. All right, correct. This is false. The balance sheet does not provide valuable information, but it should be looked at alongside the income statement and statement of cash flows to provide the fullest picture possible. Okay, so it could have been correct if it says the balance sheet gives the picture of the balance of business financial position, hindi most complete. Okay, tama si Dexter. Dahil hindi naman to, when you look at the business's financial position, you should also look at the income statement and the cash flow to get the fullest picture possible. All right, in fairness, medyo tricky din si QuickBooks. Hindi siya madali. Right, it's a bit challenging. All right, next, the statement of equity, the financial health of the business, the owner's share. In the simplest terms, equity is the money the shareholders, whether a single owner or many stockholders, have invested into the business and all the accumulated earnings of the business over time. Tandaan nyo ito because this is tantamount to basis. Pagdating natin sa business returns, we will be tackling about basis. So the statement of equity is basically the equity portion of the balance sheet pulled out into its own financial statement. This important component of the balance sheet reflects changes in business equity over time, including contributions, withdrawals, and retained earnings. It provides insights into the business's financial performance and how it distributes profits or accumulates losses. Retained earnings, right? This is kind of complex to understand, but let's see what QuickBooks has in store for us to make this simpler. Retained earnings. From the statement of equity, also known on the balance sheet, it is the accumulated net income from previous year minus any dividends paid to shareholders. Let's deep dive deeper into the statement of equity in the video that follows.
The statement of equity reports the changes in business or owner's equity during the reporting period. It shows the owner's equity at the beginning of the reporting period, the changes that have affected that amount, and the resulting ending equity at the end of the reporting period. These changes include earned profits that have been retained by the business at the end of the year. The statement begins with beginning capital, then adds in any owner contributions and net income for total capital or income. It then subtracts the amount of any losses or capital withdrawals, which results in the amount of equity increase or decrease over the accounting period. The statement of equity shows the accumulated retained earnings, the portion of a business's net income that is not distributed to shareholders as dividends at the end of the year. This statement is used by small businesses and more often shared by stock and shareholders.
Right. Let's just see. Let's just continue, guys. Later na lang ako try to add something. So try it out. Statement of equity. Craig asks you to see if there is enough equity for him to take an additional draw of $2,000 against his equity. In the following activity, use the drop-down menus in the excerpts from the statement of equity to select the appropriate values to complete the report. Review the information to determine if there is sufficient equity available for Craig to take a draw. When you are finished, select Submit. Right, so these are the owner's investments, total $18,936. This is the first year of the business, right? Let's see. I think this is the first year of the business. There's no retained earnings yet, right? First year of the business, so no retained earnings. Because again, retained earnings is the net income over the years, right? Less any withdrawals and dividends. So if the total equity is 26,775.03 and your total investment was 18,936, so that's 26 minus 18, you'll come with your net income because we're basically working it back, right? We're doing a work back calculation. So the amount is 838.55. So now that you have that amount, you just have to counter check if 18,936.48 plus 7,838.55 is equal to 26,775.03. That's how you would look at it, okay? Let's hit submit. That's correct. Knowledge check. What other financial statements should you check before answering Craig's question about the 2,000 draw? Right, is it income statement? Is it balance sheet? Is it statement of cash flows? Or is it all of the above? So the question was is there enough money to make a 2,000 draw? Right, meaning kailangan ng 2,000 ng owner for personal reasons or whatever it is that he wants to spend the $2,000 on. Which part of the balance sheet does he look into, right? Is it the income statement? Is it what particular financial statement does it look into? Is it the income statement? Is it a balance sheet? Or is it a statement of cash flows? Right, so what other financial statements should you check before answering Craig's question about the 2,000 draw? Do you look at income statement as well? Or just the balance sheet? Why am I seeing all? When the question, what other financial statement should you check before answering Craig's question about the 2,000 draw? Ano ba yung question ni Craig? Craig asks you to see if there is enough equity for him to take an additional draw of 2,000. In the following activity, use the drop-down menus in except from the statement of equity to select appropriate values to complete the report. So why does he need to look for the income statement to get a 2,000 draw? He would only look at the amount of cash available and the equity that he has, right? Which is in balance sheet. Why does he need the income statement? Anyone wants to share his thoughts? Why does he need income statement to know the revenues you earn and expenses you incur? Right, but that's the income component, right? The income, you would also see that on the balance sheet anyway. So if I'm the owner and I come to you as a bookkeeper and I say, I'm wondering if I have enough funds to take a $2,000 draw. do you need me to see the income statement, or will the balance sheet be sufficient? Right? Because again, in the balance sheet, I can see the income statement, right? Or the net income. So in the balance sheet, I can already see that there is an income on that period of 7,388, 7,838. So I don't need a balance. I mean, if this is me answering the question, I would not need the income statement, neither the statement of cash flow. But the question is, what other financial statement should you check? What other financial statement should you check before answering Craig's question about the 2000 draw? Okay. So income statement to corroborate, parang ganon. Tapos cash flow. I don't know, I'm not quite convinced. But I feel like all of the above because you have gone through this already. Right? But again, guys, if you think about it, the balance sheet would be sufficient, right? But I feel like the question is asking us to think more than that, right? That you could also look at the income statement. So ano bang gamit ng income statement? Maybe for the owner to understand how much he actually made during the period versus how much he's actually thinking of as a drawing, right? Because if you look at the income statement and you're thinking of drawing 2,000, maybe your income was only 1,000. So that gives you an idea that you're drawing more than what you made during that period. Could be that, right? Statement of cash flows. Cash flows would be where your cash has come from and where it's going to, right? I don't know. But if it's all of the above, then it should be. But I still feel like balance sheet is enough. Anyway, let's see. Oh, correct. So you will want to check the balance sheet to verify there is sufficient cash available for Craig to take the draw. You will also want to check the statement of cash flows to be sure there are sufficient funds to cover upcoming obligations. Okay. The income statement will provide insights into whether there should be concerns about the ongoing profitability of the business. Okay, makes sense. So need daw yung cash flow so that the owner would know if there are upcoming cash outflows that he may consider before taking the $2,000 draw, right? And then, so again, this is where the financial statements are providing value to the owner in terms of making that decision, right? Because again, the reason why as a bookkeeper we provide him financial statements is that it can support his decision making. Tama ba na si Craig ay magti-take ng $2,000 draw from the account, right? Or from his business, right? So the balance sheet would provide him information. However, he should also look into the cash flow to see if there are sufficient funds na nakakailanganin for upcoming obligations or any other cash commitment, right? Baka naman kasi yung 2,000 is too much. If he takes out 2,000, baka wala nang pambayad sa mga payables na upcoming in the next few days, right? So that's what the cash flow is for. And the income statement also will provide him the insight whether there should be concerns on the ongoing profitability of the business. So if the income statement will show him that, he's only making $1,000 a month, then that may tell him that he's drawing too much money from the bank or from his business, right? So that could tell him the reasonableness of his drawing. Are you getting the point, guys? So the financial statements, again, this is where the value of financial statements will come in. It will help the business owner support his decision making. You get what I'm saying? So hindi lang siya pang display, ha? It supports decision making, right? Now, which of the following is not a component of the statement of equity? Is it total owner's investment? It is a component. Retained earnings, it is a component. Source of business revenue, it is not a component. It is a component of cash flow. Owner draws, it is a component. Net income also a component. So the third one would be our answer, right? And I think everybody got it. So correct. The statement of equity does not reflect the source of business revenue. All right, 6 out of 9 or 5 out of 9. Lapit na tayo. Statement of cash flows. There's one thing I would like you to remember about balance sheet, okay? So remember this discussion because it will be brought up again in our discussion on the business tax returns, right? Kasi may balance sheet component doon sa business tax return. So we will relate it later as we go along in our course. Kaya I made the decision to teach bookkeeping first before diving into business tax return para yung mga wala masyadong pang accounting background ay hindi kayo masyadong ma-overwhelm pag nag-tackle na tayo ng business return, because by that time you would have already encountered the terminologies that's used in the business return, which are again most of the time it's income statement and balance sheet. Okay, so we are preparing you for that. Ang cash flow sa business return hindi na to masyadong hindi na to at all hindi ginagamit, but let's just breeze through this, okay? What the cash flow is about. So what's happening with the money? The statement of cash flows provide valuable insights into a business's financial health and cash management. So balance sheet plus income statement equals statement of cash flows. A statement of cash flows combines information from the balance sheet and income statement to provide a comprehensive view of a business cash flow activities during a specific period. Explore why this financial document is so crucial to businesses in the video that follows.
The statement of cash flows shows where and how cash flows into and out of the business, revealing where the money comes from and how it is used. It combines information from the balance sheet and the income statement to provide a comprehensive view of cash as it moves through the business. While the balance sheet can show cash on hand, the statement of cash flows also shows the source of the cash. So if that cash came from sales or from financing, and how it flowed through the business during the period. Let's look at how this works. Consider a business with $100 in starting cash, which is the amount in their bank account at the start of the accounting period. They record sales for the period and have $200 in net income, which, if that was all that happened in the business, would mean that there should be $300 in their bank account at the end of the accounting period. But that isn't always the case, is it? The situation is often far more complex. There are various factors affecting the business's financial records, depending on its intricacies. To accurately represent the reality, we must account for other changes in assets and liabilities. In this scenario, let's focus on accounts receivable, which tracks the money owed to you. If this account increases from $0 to $400 during the period, that means there are outstanding payments yet to be collected. As the cash for these sales has not yet been received, we need to subtract this amount from the cash available to the business. This leads to an ending cash balance of negative $100, matching the amount listed in the balance sheet. This example shows why keeping track of cash flow carefully is so important. Even though the business realized a net income because the customer paid on credit, the way the cash moved through the business resulted in a cash flow problem. As you can see, while net income equals revenue minus expenses, what is not included in this equation is changes in assets, liabilities, and equity. This is why it is so important to regularly prepare and review the statement of cash flows. It guides cash management decisions and promotes proactive financial planning by helping the business keep track of their cash, identify any cash issues, and plan their finances better.
All right, guys. Is there any volunteer to expound on cash flow? Cash flow is not my favorite topic, but if you guys can chime in. Meron ba? Is there anyone who wants to cover cash flow? I'm trying to retrieve my COL account. Nakalimutan ko na yung password ko because I have not used COL in a long time. Kasi nga wala nang kwentang mag-invest sa Philippine stock market these days. Anyone here nag-i-invest sa stock market? Tell me. Share. Which stock are you invested in? A REIT? BDO? Anyone here? I'm curious. Nag-i-invest sa stock market. Me before si Joel. Before, what happened, Joel? Why have you stopped investing? Sa JFC. What happened, Joel? Why have you stopped investing in the Philippine stock market? Si Simon Simonet sa BDO, si Anna sa ICT. BPI si Maan. Oh my God, hindi ako makapag-reset ng password sa COL. I was gonna show you something kasi. Because I was gonna give you a little bit of a practical use of a cash flow. Because that day when I was still actively investing, before I would invest, I would do fundamental analysis. Kasi may dalawang types of analysis when you wanna study the financial health of, or sorry, when you need to conduct at least 2 studies when you're trying to invest in a stock, right? Fundamental, meaning you look at the financial side. Technical naman, when you look at charts, right? Meron ba ditong nagte-technical analysis? Right? Si Ana, nagte-technical ka, Ana? I feel like I cannot do technical. But since I have an accounting background, yun nga, nagpa-fundamental analysis ko, and I will look at the cash flow then as part of my consideration if I'm gonna invest in a stock, right? But for some reason, maybe we can do it tomorrow. I'll give you a classic, or not classic, a little bit of context as to what is the use of a cash flow, right? But when you look at cash flow, it basically tells you the picture of the cash, right? Like how does cash come in and out of the business in a given period, right? So cash can be used for operation, cash can be for investment, or cash can be from financing activities, right? So in a small business, it could be that, or paano ba itong i-contextualize ang cash flow sa isang business? Kasi minsan, a business owner may think may kita siya, right? Because a typical business person na walang updated financials would look at the bank as the reference if there is profit, right? Now, what if yung kanyang business pala ay laging nangungutang, right? Nangungutang sa mga financing companies. So may cash siya, right? But he does not know, if without the cash flow, he would not know where did that cash come from. So possibly may positive cash balance siya sa balance sheet niya, pero losing pala yung business niya, right? So positive cash flow, but losing ang business. It is possible, again, because it could be that the cash came from financing activities, right? Or it could also be a case wherein you look at the financial statements, particularly the income statement, and you see that there is a huge loss in the books, right? But if you look at the cash flow, positive naman siya, because it could be that the loss is a paper loss, right? It could be because of depreciation, right? Malaki yung depreciation that it created a paper loss. But if you look at the cash flow, malaki naman yung kanyang cash flow from operation, right? So you look at the financial statements as a whole, right? Not just like the balance sheet, not just the profit and loss, but you look at the cash flow as well to fully understand the full picture of the business financial situation. You know what I mean? Because one report, if you take it as it is, it could be misleading, right? So maraming pwedeng tingnan, and maganda kasing example yung mga publicly listed companies na financials because they are audited, right? They are audited by reputable firms, and magandang gamitin yun for analysis, right? But just to put simply, a cash flow statement will show the inflow and the outflow of the cash related activities of the business during the period. Make sense? So let's not expound on this tonight. I'll try to recover my password by tomorrow so that I can show you in more context ano yung gamit nung kahit nga yung balance sheet at saka yung cash flow. Mas maraming pwedeng paggagamitan nun more than just looking at the profitability nung business. Okay? So you would want to know before investing in the stock market if the business is liquid, right? Or if the business is highly leveraged, right? Kung mas malaki ba yung utang ng business versus the equity, medyo matatakot ka niyan, right? Because the business might be unstable. But again, the way you would know this is by looking at the financial statements, right? Because sabi nga nila, numbers do not lie. But for now, we'll stick with what QuickBooks is giving us, but hopefully tomorrow we can put this into context, okay? So operating expenses. Operating expenses, also known as operating costs or operating expenditures, are the day-to-day expenses incurred as the business generates revenue. These expenses are directly associated with the core business activities. Operating expenses typically include items such as payroll, rent, utilities, insurance, marketing, and advertising expenses, office supplies, insurance, maintenance, and repairs, and other costs directly related to running the business. So JR, this was your question. Operating expenses, nakaseparate to sa cost of goods sold, right? Kasi if naka-merchandising form yung business, like buying and sell of clothes, for example, so the sale, of course, is the revenue, right? The amounts that you generate from the sale of clothes, right? But you would also take into account how much those clothes worth. Magkano yun mo kinuha, right, from the vendor. So that's the cost of goods sold, right? So your sales minus your cost of goods sold is your gross profit. Now, less your operating expenses. Ito na yung rent mo, utilities, yung payroll, and these operating expenses kasi iba yung behavior niya versus the cost of goods sold, right? Cost of goods sold is directly attributable doon sa item na binenta mo. Operating expenses naman, hindi, not necessarily. It has something to do with you running the business. You get what I mean? Because it can be sometimes yung sale mo konti, but your operating expenses mo malaki, right? That would generate you a loss. But your cost of goods sold has a direct relationship doon sa sales mo. Kasi kung wala kang sales, wala ka din cost of goods sold. But sometimes, kahit wala tayong sale, we still have operating expenses. Kasi like, for example, rent. Diba, rent ay you pay rent kahit wala kang sale. Kasi fixed agreement yan with your lessor, right? So that's operating expenses. Now, operating profit, the profitability of a company's core operations before interest, taxes, and non-operating expenses are deducted. This is calculated by subtracting the total operating expenses from the gross profit. In technical terms, this is also called the EBIT, right? So EBIT, earnings before interest and tax, right? Most of the time, investors would also look at the EBIT, right? Because it doesn't really care about the interest. It doesn't really care about the tax. It really takes about the core operation of the business. The core operation being the earnings before interest and tax. So let's try it out. In the next activity, open the attached spreadsheet to select the appropriate information to complete the excerpt from the statement of cash flows. When you are finished, select Submit. To explore the full statement of cash flows, open the statement, select the spreadsheet to download the file. So sige, download natin to kasi wala tayong statement of cash flows sa ating working file. just so you see how it looks like. Right, so this is the statement of cash flow as an example. You guys are seeing it. So this is Craig's landscaping statement of cash flows. So you see there's operating activities, there's investing, and then there's financing activities. So these are the three major activities of the business that involves cash, right? So when you say investing, these are the result of the operation, right? Or say the operating activities is the result of the operation, the buy and sell of inventory, the collection of accounts receivable, payments of all the expenses and whatnot. Those are related to operation. And then some investing, the purchase of machinery, equipment, those are related to investing, because see, these are the usual reasons why money is going out of the business. Then financing, this has something to do with loans, right? So pag nag-loan yung business, it's a positive cash flow. Pag nagbayad naman yung business ng loan at saka interest, those are also financing. And that includes investments and drawings from the owner, right? So those are financing related activities. And what you see here at the end of the period, this is your ending cash balance that you will see in the balance sheet, right? Kaya sinasabi natin ang cash flow tells you a story of the in and out of the cash, because usually it would start with the beginning cash, right? But landscape only started during the period, so walang beginning cash. But it would start with beginning cash, tapos plus minus na lang, and then after that, you will get the ending balance of the cash. So looking at this, you will see kung saan nanggaling yung cash ng business at saan napupunta din yung kanyang cash. Does this make sense? Kaya nga statement of cash flows. Right, so we are going to solve this problem on cash flow. So net income, and then all the adjustments. So this is basically just work back, right? So how much was the net income? Sinabi ba? So parang dalawa ang kanyang problem. Parang hirap naman ito. So you would have this both. Parang ang hirap ni isolve. I mean, ang hirap relative to someone na wala accounting background. So how do you guys solve this? Net income is 7,838.55. Net income is given in the statement of cash flows. Okay. Yun yung nasa Excel. Let's reopen that Excel file. So the net income was 7,838.55. So that's what we enter here, right? Thank you, Merlita. So 7,835.5. Wait lang. Ayun na pag-uwi na lang natin yan. So 783. Wait lang. Kano? 7,838.55. 7,838.55. All right. So what we do is 7,83555. Total adjustments to reconcile net income to net cash provided by operations. So this is net cash provided by operating, net cash by providing, net cash provided by financing activities, net cash increase for the period, cash at the beginning. So parang irrelevant naman yung net income, di ba? To get the cash at the end of the period, what you just do is adjustment, or how do you resolve this? This is just right. The net cash provided by operating. So what you do is like you get the beginning cash plus the net cash provided by operating, net cash provided by investing, net cash provided by financing activities. And so you will have your cash at the end of the period. Tama ba? Let's resolve. Let's check. I will also check if tama yung aking understanding. So I have the beginning cash of 56 is 608.98 plus 21,279.85 minus 32,190.30 plus 28,657. Parang mali ako. Magkano yung answer niyo? 17,000 na positive. Net cash increase for the period. Okay. So parang ano talang yan? 56,608.98 minus 39,568.55. Tama. So what it does is 56,000 na beginning minus 39,000 na net cash increase for the period. Actually decrease siya. Right? Where did that 39,568.55 come from? It's a 21,279.85 plus 28,657 minus 32,190.30 plus what? Parang mali ako. So 56,608.98 minus 39, yeah, so that's 17,043.43. But how did that 39,568.55 come from? So cash beginning of the period, net cash increase for the period equals cash end. But is it pwede bang i-calculate yung net cash increase for the period na 39,568.55 negative? Was it coming from the total general consolidated income net cash provided by operations? Let me see, 13,441.30 plus 21,279. Sorry sa mga no overwhelm ngayon. I know it could be very confusing, but what I say, laban lang. Hindi ko siya ma-figure out. Yung net cash increase for the period, are you able to figure this out? Kasi tatlo lang naman yung sources ng cash, right? The operating, the investing, and the financing. Binigay naman na to. So my brain is telling me it should be the net cash provided by operating activities minus the negative amount from investing and then the financing activities. Ito lang naman yun eh, right? This is what your cash movements are during the period, right? Then your beginning period, your beginning cash should be your ending cash, right? But it doesn't make sense. Itong tatlong to, it doesn't add up to 39,568. But I don't want to complicate things. Hindi rin eh, hindi na relevant yung previous year kasi binigyan ka na ng beginning period eh, 56,608.98. So yung beginning period is no longer relevant in this case, right? So irrelevant na yung previous period. Ito na yung relevant. Itong operating for the year, investing, financing activities. These are where your cash went into and came from, right? But I don't know why it was given, which is good, right? But we should make sense as to why this 39,000 come from, right? But if we cannot make sense from this example, I don't know, there's more to it than meets the eye. But sa mga accountant, nagigets niyo yung point ko. Bakit hindi ko siya...
Chris,
Yes po, Joel.
yun pong sorry, the net cash increase for period, which is negative 39, is when you subtract the cash at the beginning of period, subtract it with the cash at the end of period. The result is the negative 39.
Yes,
So
it's a work.
that's the difference.
It is a work back. Joel, thank you for that. But I'm clear on that side, right? But what I'm not clear about
Chris, can I speak?
Yes po, Alma. Go ahead.
Kasi gumagamit ako ng headset, di mo ata ako naririnig. Tinanggal ko na lang. Usually kasi, when we prepare the cash flow statement, we compare it sa previous year. Kaya, there's a positive and negative kasi increase, decrease. Previous, kunwari, 2023 versus a total asset ng 2023 minus 2024. So, that would be, kung nag-increase, positive, ganun. So, kaya siya may mga plus minus dyan, baka doon siya nag-base sa pinapa-download na document. Yun lang. Kasi hindi ko makita kasi nasa cellphone lang ako eh. Usually yun yung sa pag sa cash flow, yung increase, decrease ng previous year to the current year. Tapos makukuha na natin from the financing activities, from the, let's say yung accounts receivable ba niya, nag-increase ba this year?
Yeah.
Accounts payable.
Thank you, Alma. So yeah, that's, diba, ang cash flow, dalawang method, direct at indirect method, right? Itong ginamit niya sa Excel, this looks like a direct method, right? This is a direct method that shows magkano yung 17,000. So hindi na siya nag-increase, decrease. But let's make sense of this. So net income, adjustments na 21 minus 32. Let's see kung kaya nating sundan to.
Ayan pala. Hindi ko kasi makita dahil nasa cellphone lang ako.
No
Hindi ako
problem.
makaparticipate.
Net cash. Saan ka ngayon, Alma? Nasa Davao ka or?
Opo, bukas pa yung flight ko pabalik.
Alright, ingat kayo. But thank you for
Thank you
participating.
po.
Ayun. So the 39,000 is actually the net cash provided from operating activities, which is 21 minus 32 plus the 28. Ano nga naman? 39. Yung calculator ko yung mali. So ito nga, the operating, if you look at the formula, 21,279 plus the 32,190 plus the 28. Ito na yun. Ito na yung 39,568. Then plus the cash beginning, kaya 17,040. Yeah, makes sense. So, itong ginamit niyang cash flow statement, ito yung direct method, right? Or indirect na to. I don't know, I'm confused now. But this makes sense to you guys. Itong mga net provided by operating, investing, financing, these are the three components of the cash flow that tells you the sources of cash, right? Or where the cash was used for, right? So indirect daw pala to. Diba yung direct na sinasabi ni Alma na comparison ng mga receivables, payables, those are called the direct cash flow method. But we're not going to deal with that, right, guys? Because this is really highly advanced topic. Ako nga medyo nako-confuse ako, but the premise of cash flow again is it's just really tells you a story of where the cash come from and where it went to during the period, right? And this is exactly that. This thing that you're seeing on the Excel file, that's the story of where your cash, the story of your cash activities during the period. Okay? Copy, guys? Sa mga na-overwhelm, pasensya na po. Naging OC lang ako earlier. Let me see. Parang may na-receive na akong email. Give me 1 second to reset my COL password. Para lang tomorrow, meron tayong kapag-practicean na financial analysis, which would be good for you guys. Wait, hindi pa. Nasa ibang email ko pala yun. Sige lang, tomorrow na. So that mas mag-sink in sa inyo yung usage ng cash flow. All right, for now, knowledge check tayo. Which of the following is false about the statement of cash flows? First, it categorizes cash flows into 3 main categories: accounts payable, accounts receivable, and cash on hand. It categorizes cash flows into 3 main categories. So this is wrong, right? It should be operating, investing, and financing, right? but let's look at the other three choices. It shows cash generated or used by the core operations of the business. So this talks about the operating activities. Next, it provides information about the cash inflows and outflows of a business during a specific period. This appears to be correct as well. And then it helps assess the liquidity and financial health of the business. This appears to be correct as well. So answer is A. Are we all in agreement? Where is the chat? All right, A. So everybody is in agreement. It's letter A because it's not accounts payable, it's not accounts receivable, it's cash. It's not cash on hand. It is the operating, the investing, and the financing activities of the business. That's what the cash flow shows. All right, so all of these are true with one exception. The statement of cash flows actually categorizes cash flows into three main categories: operating, investing, and financing activities. Right, let's go with number 7, summary activity. Time to practice. Setting the scene. Your client is seeking clarity on the relevance of different financial statements for a specific task. Client, question: I don't really understand which financial statement I am looking at and how each statement is helpful. Can you help me? Look at the portions of the financial statements below and answer the questions that follow. So this is total revenue, total cost of goods sold, gross profit, total expenses, net income. Which financial statement are you looking at? Is it the balance sheet? Is it the income statement? Is it the statement of cash flows? Or is it the statement of equity? What's your answer, guys? It's very clear, right? It's the P&L statement or the income statement because it tells you what the income is during that period. It's the income statement. Right. Good job. Next, how is this financial statement helpful? Right. So, paano daw naging helpful ang income statement? So the income statement gives a partial picture of where money goes since it shows all the expenses. However, if money was spent to pay back a liability, then that would reflect on the balance sheet. This is wrong, right? Because money goes is cash flow, right? So that's not a correct answer. Next, it gives a snapshot of the equity for a given reporting period, but it doesn't show how the equity has changed. This is wrong because this is in the balance sheet. Next, it helps us in understanding how cash is generated and utilized within a business, but does not directly reflect the profitability or financial performance of a business. This is also wrong because this is cash flow. Next, it evaluates business profitability by analyzing changes in retained earnings, which represent accumulated profits over time. However, it may not provide enough information for external users to assess the business's financial performance and position. Parang hindi rin. Wait lang. So A yung sagot niyo. It gives a partial picture of where money goes since it shows all the expenses. However, if money was spent to pay back a liability, that would reflect on the balance sheet. Mukhang ito nga, kaysa sa letter D. It evaluates business profitability by analyzing changes in retained earnings. Parang balance sheet kasi ito, which represent accumulated profits over time. However, it may not provide enough information for external users to assess the business financial performance and position. Ito nga yung ina-assess ng P&L financial performance. So, hindi rin D. Right, it is equity. So A, it gives a partial picture of where money goes since it shows all the expenses. Yeah, so it shows all the expenses here. However, if money was spent to pay back a liability, then that would reflect on the balance sheet, which is tama naman. Payment on the liability is on the balance sheet. So hindi pala to cash flow, mali ako earlier. So it could be A, and it's not D, right? Let's see your answers. A, D, D, B. Parang hati tayo, right? But hindi B, right? It gives a snapshot of the equity for a given reporting period, but it doesn't show how the equity has changed. So this is definitely not the answer because this is balance sheet. It helps in understanding how cash is generated and utilized within a business, but does not directly reflect the profitability. So mali na to kasi nga P&L reflects profitability. So I think letter A. Are we gonna go with letter A? Yeah, I think A. So that's why it's important when you look at answers, choices, read everything, okay? Don't just pick one and then hit submit because we may be making a mistake. I'm not even sure if this is correct, but let's hit submit. Okay, correct. So the income statement or the income generated, the income statement gives partial picture of where money goes since it shows all the expenses. However, if money was spent to pay back a liability, then that would reflect on the balance sheet. Right. So next, this is clearly a what? This is a balance sheet, right? Where you have your total assets, then total liabilities and equity. So this is a balance sheet. Everyone in agreement? All right, let's hit submit. And that exactly is a balance sheet. So how is the financial statement helpful? Ito na naman siya. It gives a partial picture of where money goes since it shows all the expenses. So hindi na ito yung answer because this is income statement. Next, it gives a snapshot of the assets, liabilities, and equity for a given reporting period, but it doesn't show how they have changed. This could be, but let's look at the other answers. It helps in understanding how cash is generated and utilized within a business, but does not directly reflect the profitability or financial performance of a business. So this is a cash flow, right? Letter D, it evaluates business profitability by analyzing changes in retained earnings, which represent accumulated profits over time. However, it may not provide enough information for external users to assess the business's financial performance and position. Is it letter B? But it doesn't show how they have changed. Tama naman. It would show kung may comparative, diba? From 2023 or 2024. But as it is, it doesn't really show how the assets have changed, how the liabilities have changed. Maybe the equity, because it will show the retained earnings as well as the drawing and any investments. So is it letter B? Everyone in agreement? Letter B? I guess letter B. All right, correct. The balance sheet gives a snapshot of assets, liabilities, and equity for a given reporting period, but it doesn't show how they have changed. Right, so this is the balance sheet. What? Parang mabalik-balik. This is equity, right? Okay, so what financial statement are you looking at? Balance sheet, income statement, statement of cash flows, or statement of equity? So letter D, right? This is part of the balance sheet, but particularly the statement of equity. Kasi ito lang yung portion na pinakita, yung equity portion lang, right? But the statement of equity is a component of a balance sheet. Agree? So that's equity. That's right. This is a statement of equity. Haba pa pala nito. Tapusin natin to tomorrow. Magna-9 na kasi. But how does it make you feel so far? Are you enjoying it? Medyo na ano din ba yung mga brain cells natin na alog? Right? So it's a very interesting topic. I really love financial statements because like what I said, na-share ko na sa inyo, before when I was investing, I would look at the financial statements talaga. And also, it really helps when you understand financial statements when you prepare business returns, right? Again, because now you will understand ano yung equity, how that relates to basis, anong movement ng balance sheet. Sa balance sheet mo makikita kung may bagong assets ba yung business, right? But I'll talk about this in more detail as we go along, and specifically on the preparation of the business return, right? And sometimes as bookkeepers, we neglect these things. Because again, as a bookkeeper then, kung bookkeeping lang yung ginagawa natin, we don't see the entire picture, right? Kaya minsan hindi natin nakikita yung value din natin sa ating mga ginagawa, right? That's why we tend to either overvalue ourselves or undervalue ourselves, right? And so hopefully sa mga na overwhelmed today because of the terminology such as retained earnings, dividends, cash flows, investing, financing, I know it can be overwhelming. I completely understand that. But okay lang yan. Okay lang yan. It will make sense as we go along. Lagi ko yung sinasabi, di ba? Wag niyo lang hayaang i-defeat kayo ng na-feel niyo, right? And if you are overwhelmed and if you feel like there's too much information, kaya nga limit natin for 2 hours din yung session natin, just so you can have the time to absorb things, and then later on you relax your brain, your mind, and then maybe dig a little deeper as you go along. I mean, as the mind relaxes, to allow it to absorb, kasi pag masyado ng maraming information, tendency is nakakalimutan natin, or the brain shuts off, right? Ayaw natin mangyari yun sa inyo na nagsha-shut off na yung brain. But share ko lang, every time I'm dumbfounded with too much information, ang lagi kong tinatanong sa isip ko is why? Bakit ko kailangan tong aralin? Right? Bakit ko siya kailangang aralin? And then once I get the answer to the why, it slowly parang nag-open yung brain na, okay, you have the why, now you start figuring things out. So I hope that also made sense to you. You have to know why we are studying it. And for me, share ko lang sa inyo na as early as now, we are studying the financial statements because you will really gonna need the financial statements when you're preparing business returns. And also, ang financial statements kasi yung pinaka-output natin as bookkeepers, di ba? Paano pang naging bookkeeper tayo kung hindi tayo makapag-provide ng financial statements? Di ba? Or kung mag-provide man tayo ng financial statements, mali-mali yung binigay nating financial statements because mali-mali yung ginagawa natin sa processes mali-mali yung ginagawa nating processes to come up with the financial statements. You get what I'm saying? So, yan, mahalaga talagang aralin natin yung fundamentals para meron tayong solid na foundation. Right? Pag solid yung foundation niyo sa bookkeeping, sa accounting, you can take more complex tasks as you go along. Hindi masyadong malilito yung brain niyo kapag dumating na sa point na complex na yung transactions na pinapagawa sa inyo ng client. Okay? All right. So I guess with that said, it's been a productive day today, Saturday evening, and you guys are here. All right? Parang mga ano lang tayo, mga baliw, ano? Saturday night, but yet we are studying. Grabe naman yung commitment na yun. Diba? Grabe naman yung commitment na Saturday night, nag-aaral tayo. But hats off to you. If you're here and you've been consistently attending, pat yourself in the back. That means you are committed to really growing yourself, providing yourself with knowledge and insights para mas makapag-provide kayo ng value. Kasi lagi natin yung iisipin we are improving ourselves so that mas magiging valuable tayo, right? Sa ating mga client. Huwag nating isipin na pera-pera lang yan. Kasi again, when you become valuable because of what you know and your skills, the money will just naturally come in, right? Huwag nating i-chase yung pera kasi pag lalo nating chinase yan, lalo yung mawawala, no? Ang i-chase natin rather is yung skills, yung character, yung attitude, and kusa na yung papasok si $sign, right? So yun yung gawin natin. And congratulations guys for having shown the commitment on a daily basis. And the same way goes, to me, I've been doing this and making sure that I feel committed every single day because I'm excited, seeing you progress, seeing you getting clients, seeing you earning more dollars, and hopefully you would come visit Bohol and Borles Accountant Cafe. Manglibre kayo. Charet. Pag meron na kayong maraming dollars, dolyares. It will happen. I know it will happen. Especially if you're here every day, it will happen. Just a matter of time. All right. So having said that, thank you guys again for today. I'll see you guys again tomorrow. And nagsabi na si Ma'am Shone sa GC nila ng team na wala munang, tama ba ako? Baka mali yung reading ko ha. But wala daw, si Cherry yung nagsabi sa chat na wala munang EA review today kasi marami silang personal na gawain. So we'll be resuming. All right, so pahinga na muna tayo guys. Tomorrow is Sunday, church day. So you guys have a blessed Sunday ahead and we'll see you tomorrow night, same time. Alrighty,